Hey guys, what's up? Charles Float here and welcome back to another video. I know in the last video I said that these videos are going to be kind of a rarity where we're going to be talking about finance and stuff, but I got so many DMs, so many comments, so much praise in the last video, and you guys loved it so much so that I thought I would drop another one very soon. I've got the bug for YouTube, so don't be sad if you see a ton more content out of me very soon. So yeah, in this video I'm going to be going through my own personal stock portfolio as a 25-year-old millionaire. I'm going to be talking about the methodology behind why I'm buying stocks, my three biggest holdings, the biggest investments I made this year, my dividend holdings, and then a load of other tips and tricks throughout that I have learnt over the last 5 or so years of being a stock-based investor and using it as my main source of savings. I use stocks as the main source of putting all of my savings into. I'm a firm believer that you should not be leaving money in a stale bank account that's earning you like 0.5% interest. You want to be making as much money as you possibly can. And stocks and dividend plays are generally the way you're going to be doing that. So stick with me. This is going to be a bit of a long one, but it will give you a ton of insight and hopefully you guys can get a few stock picks out of this for yourself. So let's just jump into it. So before we jump into the video, I just want to say that I am not a financial advisor. This is not financial advice. I'm a full-time digital marketer. I just use stocks to put the majority of my savings into. I do also have a crypto portfolio that I've just done very well off, though I do not actively invest in it nearly as much as I do with stocks. Maybe if you guys are interested, drop a comment down below and I can do another video on my crypto profile. But I just want to clear the air, make sure that you guys are not taking this as 110% financial advice. You know, I'm not a full-time stock trader. I'm not a full-time broker. I'm not anything like that. I just have been quite lucky with the stocks that I've been able to do. And I'm pretty good at research because of my job, of course, being an SEO, doing quite advanced and complex research methodology. So stay with me. I think this is going to be quite interesting for some of you, and I think that some of you are going to be surprised by some of the stock picks that I actually will have in my portfolio. So about 5 years ago when I first started out doing stocks and buying stocks, my methodology was pretty non-existent. I didn't really have a plan. I was just kind of firing blank and seeing what stuck and what worked, kind of buying the big brands and big names that we all kind of knew, and they actually did go up, surprisingly enough. It's one of those things that over the last decade or so, stocks have just continually risen for the big brands and big companies, and it has kind of allowed some savers and some stock brokers, some traders, etc., to just kind of be a bit more passive because it's so easy to just kind of bet on some big names and they're almost always going to work out anyway. But my methodology, especially in the last couple of years, has got a lot more sound. I kind of put it down now where I start off every year with annual seed capital, where I have a round of seed capital which I've generated last year of my own business, SEO, etc., and then I use that to make investments. You know, the majority of it is going to go into stocks, some of it's going to go into crypto, some of it's going to go into other things, but the majority of it is going to go into stocks. I then research growth stocks at the start of the year. I speak to a ton of people that I have a very high level of respect for that do a lot bigger plays than I do when it comes to stocks. I'm in a lot of Discord servers. I watch a lot of YouTube. I do a ton of reading of books and stuff to try and find out who's the big players. I do a lot of quarterly reports, end of year reports, that kind of thing of companies to just see the state of kind of players and see where we can go in the next year. And then I buy dividend plays every single month. I use the dividend capital that I get, which is just a very simple system that a lot of investors use, where you use the dividend value from the previous month earnings to then buy stocks for the next month. So then every single month you're using your dividend earnings that you use, that will grow every single month to then buy more and more assets and more stocks, and it's kind of a cycle. I try to just stick to a few companies with my dividend plays just because I've researched them so heavily, and I feel like dividends are a whole other ball game that you can really dive into, and to be able to do that takes a lot of work, a lot of effort, and I'm not quite at the net worth level where having, you know, you kind of need like $5 million worth of dividends to actually make it worth its play. But you can build up to that. That's the entire point of doing these kind of dividends plays, that you build up to it over the long amount of time. And then I trade internationally. A lot of people just stick to the US stock market, or if they're English, they stick to the UK stock market. I think that's a really bad idea. I love Canadian stocks. I like UK stocks. I like some Chinese stocks, though, you know, you have to be extremely extremely careful with China and anything that you buy Chinese. I'm just generally all in with NIO. Anything else is a bit risque, especially even like Alibaba. I had some Alibaba stock which I sold this year just because of the level of risk, and with Jack Margo missing and all this stuff, it's just way too dodgy of a stock to hold in the long term. And I think they're suffering like antitrust and anti-competition investigations and everything on top of it as well. So make sure that you're looking at international plays. Make sure that you're doing the dividend plays monthly if you have the capital. Otherwise, if you don't, just stick it all into growth stocks first. And make sure that you're doing a yearly kind of plan and yearly annual roundup and seed capital for yourself, because that's how you're going to see the best results, is if you're doing a 12-month plan every single time you make trades. Okay, so on to the juicy stuff now, and on to my 3 biggest holdings. The first one is Microsoft. Microsoft, I try to buy every single year. I think they're a fantastic company. They have a level of innovation that they don't even need anymore. Their products continue to grow without that level of innovation. They continue to dominate in the cloud market, which is only getting better. Windows is still growing, which is insane. They have access to a ton of stuff. The only thing that's really failed is the Windows Phone. Even they have Xbox, etc., etc. Microsoft has just been a fantastic one. It also pays a dividend on top, so I'm even more of a fan of it paying a dividend on top. It's a small one, but for a tech company, it's decent. And the fact that it's grown so substantially over the last few years, I've gained about 200% since I started buying Microsoft in 2019. It's fantastic on everything that I've done. I'm trying every single year to buy at least now £5,000 to £10,000 worth of Microsoft stock. The next one is Tesla. Tesla has just been a roller coaster for me. I bought really early on, sold a little bit later on, then bought again, then sold again, then bought again, and then sold quite a lot of it this year due to a lot of things, especially the recent safety report that has come out where Tesla might have to possibly recall 700 and something thousand cars. At the minimum, I think it's 165,000 car recall. So it's going to be a huge hit to their stock in the next couple of months. So it's one that I don't really recommend right now, but potentially if it does dip, and it goes below that $400 mark, I think that might actually still be a good buy, because I was always buying under $300 and it still turned out to be a fantastic play for me. And then the third one was Netflix. Everybody sits on Netflix all day. There's so many people there's so many new available audiences for Netflix to go into, new markets to go into, and it's just growing every time. In Thailand, for example, you can go to 7-Eleven here and buy a Netflix subscription on the back of a gift card, as if you used to be able to do that back in the day. Pre-internet gift card kind of was around. And it just shows how many people are actually taking it on here in Thailand, which is obviously a new market for them as well. But the entire of Southeast Asia, the entire of Africa, Netflix has got so much growth to do, and they're investing in local and original content that I think that the company is only got one way to go up. And I have been buying quite a lot of Netflix stock this year when it's been dipping off. It's even been dipping this week, so it's still worth a buy if you're watching this video right now. Okay, so in terms of my biggest 2021 investments, this is all stocks that I've bought this year. So this is stocks that I'm still actively invested in and actively think will go up, though a few of them have got some levels of risk, that we'll go through that as we approach it. The first one is probably going to be my biggest winner overall. It's not the biggest winner in terms of percentage gain, but it's because I invested quite a lot into this one. And then they had a massive merger, which is in Canada. It's Canadian fibre company Shaw Communications. They ended up announcing a merger with Rogers, which is Canada's biggest internet company, though anyone from Canada, and I lived there for 2 years, will know that Rogers is terrible and Shaw is by far the fastest and best internet service. And I think it's like literally the only fibre optic service in Canada, or it was at least at the start of the year, which is why I invested in it. I didn't invest in it knowing that there was going to be a Rogers merger. I just got lucky with that. It's purely down to the fact that it was Canada's only fibre optic internet service, and I just saw in my head an opportunity there that, it's the fastest and only available internet service in one of the fastest growing population countries in North America. I thought it would be a good hedge, and it turned out that it was. I'm up about 70% or so on my investment on there, and I did put quite a substantial hedge into it, so I'm very pleased with that. Then the next one, which is by far the biggest gain this year, I'm up 120% on Asana this year. It's absolutely insane. Asana's gone ham. The amount of customer acquisition they've gone through is insane. That they're growing exponentially. Their quarterly reports are fantastic. Their marketing team's insane. Their development team's insane. They're probably one of the best, if not the best CRM on the market right now. They've smashed Basecamp. They've smashed Trello. It's really fantastic. The only other competitor is one that we're going to get on further down the list, but they are only up about 10-20%, then not anywhere near what Asana has gained this year, for me anyway. The next up is Upwork. Everyone probably knows Upwork if you're an SEO, if you're a digital marketer. It's a freelancing website. They've been killing it. They're probably the biggest freelancing website out there, aside from Fiverr, though Fiverr can be questionable if it's a freelancing site or not. They claim they are, but obviously it does a tons of other service, gifts, etc. now, and it's not just $5 anymore. You know, most of the services on there that I'm looking at don't even have a $5 option anymore. It's kind of sad. The next one is just AI. C3 AI, they're a SaaS and AI enterprise level software. I just think that this one's going to go ham just because of the ticker symbol, let alone the actual applications that they've got behind the stuff. They've got some amazing technology that is in the AI and SaaS market. And if you watch my video from the other day, you'll know that SaaS is by far the biggest multiplier and the biggest sale-based thing. So when you actually sell a SaaS company, by far you get the biggest return out of any business on the market at the moment. And then the next one is Twitter. This one is because when Trump got banned, I saw a big dip. It dipped by like 15%. 10%, 15%, somewhere around that. And as soon as that happened, I just was like, yeah, I'm picking up as much Twitter stock as I have capital right now, because I knew for a fact that it was going to go up significantly after that. Trump was not such a major part of it that it was worth a 15% drop. And I think in the long run, it actually even maybe helped Twitter, because it kind of engaged people even more radically on the other side. So I think that you've actually seeing a substantially more level of gain if you did pick up the Trump ban dip, because it was a insane dip that I didn't think was worthy of the site. The next one's Fiverr, again similar to Upwork. It's just got a lot more accessibility. There's a lot more people. It was originally only $5. It's supposed to be only $5 anyway, and it turned into a massive site. It's only been growing. The quarterly reports are looking good. It IPO'd very recently. It's not a new it's a new player, and I still think it has a ton of room to grow, as well as the fact that they're going into new markets. Like, it's insane. If you go and Google guest posts and you're an SEO, you'll know this. Fiverr is coming up for guest posts. It's really crazy on the Google ads. It's the crazy amount of markets and industries they're going into, and they've kind of realized that they're such an authority site and they have all of this capital from the IPO that they can invest in the ads, they can invest in the SEO, they can invest in the marketing, and just kind of dominate the entire space. And then next up, what is Wish? This is just, everyone's seen the Wish.com. You've probably seen the ads. They were got in a lot of trouble for running Facebook ads, where they were literally putting like auto-generated Facebook ads that were literally putting drugs in the thumbnails. You know, you could see crystal meth in your Facebook ads. It was insane. But they have also seen a crazy amount of growth. You know, I think they've grown at 30 to 40% annually. That's ridiculous. They did $2.5 billion last year. I think they still have a lot of room to grow. There's a lot of sellers on there that are causing issues for the platform. I think if they have tighter controls around who is selling on it, they might actually do better. And I still think they have a lot of room to grow. This is the one thing, especially right now. There's been a dip recently. It's down about 25% since I bought it, which is totally fine. Sometimes you lose money on plays, especially if you're going for long-term plays. But I think in the next 24 months, this stock is going to go up 100%. It's got a lot of room for growth, and I think it's undervalued right now. The next one is Salesforce. This is another CRM similar to Asana. Salesforce is just even bigger. They are gigantic. They're integrated into pretty much every major corporation in the world right now. They're the biggest CRM by far. I bought them. I buy them kind of every year as well. It's a similar thing to Microsoft. I just think that Salesforce are going to continue to grow. They have good quarterly reports. They have good signs for their business. Everything seems to be going positively for them. And again, it's not been a massive amount of growth this year. I'm up like maybe 10% or 15% on the trade, but it's still from this year's trade. Sorry, not from previous year's trades. But it's still got a lot of room to growth. It's got the CRM ticker as well, which is better than Asana's ticker. It's just got everything kind of going for it. The next one's Zillow. Now, I bought quite a lot of Zillow this year, but I'm down on Zillow, annoyingly. I think that Zillow has got quite a lot of room to grow as well again. It's the only problem is its earnings are holding its back, and the founders' technology and stuff isn't really going as smoothly as you'd hope. It has this system where it will kind of estimate the prices of houses and things, and whilst it's getting better, it has had some bad press, it has had some problems with it, and it's kind of affecting the market kind of quite rapidly, which is also why I'm investing, because it's affecting the market and it's actually affecting the price. I know some real estate agents who are literally just using the Zillow valuation as like a basis of trying to value a property, which is ridiculous. Like you need to have a look inside before you can just value a property, right? And then the final one is Deliveroo. I know that the UK was going through the pandemic last year. I didn't know if lockdowns were going to end this year because of how ham they were going with it. And I just saw that Deliveroo was going to continue to grow. I also saw that they were announcing themselves as a sponsor for the UEFA games in the UK. So I knew that they were going to be seen across the UK on television and everything when they were being sponsored there. And I know that they were doing some UEFA offers as well around certain sponsored football items and things that you could get on a discount or something if you delivered it through the app. So I saw that Deliveroo were going to go pretty wild. I'm up about 40% this year on them. They're doing really well so far. I think they've still got a lot of room to grow. They're nowhere near, the levels of Uber and stuff. And I think that they're actually getting bigger than Uber Eats in the UK right now. So I still think they have some room to grow. And you'll still Deliveroo drivers all over the place if you live in any major city in the UK. So I seriously think that they are kind of controlling that market more and more in terms of UK food delivery. So that's why I invested quite heavily into Deliveroo this year as well. So dividends are still something that I'm getting used to. I have only really been investing in them in the last 2 years or so because my net worth has started to get to the point where I can start using them to generate me actually serious passive income in return. And most of the information that I get around them has come from Chris Johnson, who is another Gumroad seller, and from his Wealth Squad, which is a Discord server that he has. And they have a dividend section, which I've learned a ton of. I'm just mainly a lurker there. I haven't really engaged a lot of people aside from DMing them. But I've learned a hell of a lot just from interacting and seeing what they're talking about in the server and seeing what trades they're making and why they're making them. So the main three that I do for dividends, and I try to stick with these three because I haven't done enough research into other dividend stocks and other dividend plays that it would make sense for me to do that, and it would make sense for me to recommend anybody else to do that, because hell no do I want to do that when I haven't done any research myself. So the first one is 1OK. They're in energy transportation, which is only going to, in my opinion, increase in the next few years. Energy is going to become more important, more reliant, and more unstable, especially with kind of renewable things coming into play. They then becoming more expensive. Fossil fuels becoming more scarce. There's issues across the board with energy where it's going to be even more important that you have secure energy transportation, and I think 1OK is a massive player in that market. Prospect Capital and Gladstone Capital are both investment funds and both hedge funds that I think are really big and really solid, and I think the people that are behind them are both interesting and solid, and that's why I invested in them, and I see their portfolio themselves actually being something that I would also back. Again, also they just pay a high dividend yield, so it's a really good play, especially if you believe in their longevity, that you can kind of get your returns on them. Some of them are 6%, 7% yields. You're going to see a return on your investment in a couple of years. It's crazy. I think that they're both high value plays, and I think Prospect specifically has actually some room to grow as a growth stock as well, considering how I think it's quite undervalued, the actual portfolio that they have at the moment, and there's not enough people looking at them. Overall, they're seen as more of a dividend stock rather than an investment fund. So I would definitely say that Prospect above Gladstone for now anyway, but in the future it might change. But those are my three dividend stocks. By far the least amount of knowledge that I have out of any of the stock portfolio video, so I hope that you enjoyed it. And thanks for watching. You can follow me on Twitter at Charles_SEO. You can check out my Facebook page at facebook.com/TheCharlesFlow, and all of my free and premium digital marketing and SEO training is available on Gumroad at charlesflow.gumroad.com. Thank you for watching. I hope you enjoyed the video. I hope you got a lot out of it. If you have any stock picks or if you have any questions, then drop them in the comments down below, and make sure to like, comment, and subscribe, and click that grey notification bell to make sure you don't miss any videos that I drop ever.